Hi there, this is Don, and welcome back to 10 by 10 in 10 Investing. This is the channel where we share our concentrated investment portfolio and its performance for your pure amusement and entertainment. Please remember that this is not investment advice. Today we focus primarily on our portfolio's number 10 stock, which is Ginkgo BioWorks. We hope you stay until the end, though, when we will reveal holding number 9 of our high potential growth portfolio. However, before we do that, let's have a quick look at where we are overall so far. So as you can see from the dashboard here, we've had a modest uptick in stock prices over the last couple of days. So far, our top stock has popped quite significantly and has resulted in a portfolio uptick of just over 1.5%. Now, let's turn to Ginkgo BioWorks specifically. Ginkgo is building a platform to enable customers to program cells, that's biological cells, as easily as we can program computers. Their ticker symbol is DNA. The company is headquartered in Boston, Massachusetts, and they employ just under 1,300 employees. So what is it that Ginkgo actually does? So firstly, Ginkgo BioWorks works in the field of synthetic biology. They leverage principles of synthetic biology to design and engineer microorganisms like bacteria and yeast to produce specific compounds and perform various functions. This technology has a wide range of applications, from pharmaceuticals and agriculture to consumer goods and industrial processes. They also have what they call their biological foundry, which are high throughput facilities equipped with advanced automation and robotics. These foundries enable the rapid prototyping and also testing of genetically modified organisms for various purposes. And that brings us on to the third thing that they excel at doing, which is custom organism design. One of the company's primary offerings is the ability to design and engineer microorganisms according to their customers' specifications. This sounds slightly scary, but this is an industry that has been in existence for a number of decades now. This can involve creating custom strains of a bacteria or yeast for unique production processes or improving existing strains for higher efficiency. Ginkgo collaborates with various industries to develop custom designed microorganisms for these specific applications. This includes creating the microorganisms we've alluded to for the production of fragrances, flavors, food ingredients, and other purposes like specialty chemicals. They have partnerships with companies in fields like agriculture, pharmaceuticals, and manufacturing. In other words, there is a broad application for their technology. So why does this matter? The company's custom organism design capabilities may result in personalized and more effective medical treatments, improving healthcare outcomes for individuals to a vast degree. In terms of agricultural advancements, Ginkgo's innovations could enhance crop yields, pest resistance, and food production efficiency, helping address global food security challenges. The successful execution of this strategy may lead to the creation of new industries and job opportunities, fostering economic growth and innovation worldwide. Ginkgo's advancements in biomanufacturing are also leading to more sustainable and eco-friendly production processes, reducing the environmental impact of various industries that they operate in. And tied to this, and last but not least, by replacing traditional chemical-based manufacturing with biological processes, Ginkgo could contribute to reducing air and water pollution associated with industrial production. So what is Ginkgo's moat? Well, firstly, Ginkgo possesses extensive experience and expertise in synthetic biology and genetic engineering, built up over a number of years. To compete effectively, new entrants would need to assemble a team of highly skilled biologists, genetic engineers, and synthetic biology experts. Building this talent pool would be time consuming and very costly. Secondly, Ginkgo has invested significantly in the development of its biological foundries, which are equipped with advanced automation technologies and robotics. These facilities enable rapid prototyping and testing of genetically modified organisms. Replicating any such infrastructure would require substantial capital investment and expertise in lab automation. Thirdly, Ginkgo has amassed a substantial portfolio of intellectual property related to its synthetic biology techniques and applications. And finally, the company has established partnerships with various industries over the last few years. Entering the market for competitors would require building these relationships from scratch with industry players, which can be complex and time consuming. Most recently, the firm announced a 5-year AI deal with Google parent company Alphabet as an example. Let's next move on to some numbers. The company's market capitalization is approximately $4.7 billion at the time of this brief video. Moving next to revenues, in 2019, the company had revenues of merely $54 million. In 2020, this grew to $76.66 million. In 2021, growth had ballooned to just under 314, and by 2022, growth had further increased to just under $478 million. This growth provides a compound annual growth rate of just over 96%, which is an extremely high growth rate. When we look at valuation, it is worth mentioning that the current price to sales ratio for Ginkgo BioWorks is just under 14.5. So growth is definitely reflected to a degree in the valuation of the company. So a brief analysis of where we are and the numbers that we've just gone through. Unfortunately, revenues are expected to drop to somewhere between 245 million and 260 million in 2023. This is mostly due to the decline in biosecurity revenues since the end of the COVID-19 pandemic. According to Ginkgo CEO Jason Kelly, the company is said to be driving towards profitability and has a $1.5 billion cash pile to draw on to help get them there. Furthermore, Kelly believes that DNA is unlocking significant productivity gains across the platform. Kelly believes that the company is already seeing results from these efforts, allowing them to add programs without a commensurate increase in spending. Lastly, DNA has the opportunity to grow with and grow into their customers. They have a number of mature customers looking to innovate with biotech, and they also have the potential to build natively on the Ginkgo foundry, and this is creating deep relationships with these clients. Right, so now let's have a look at some of the risks to Ginkgo BioWorks. Firstly, and probably the elephant in the room, is that the company is nowhere near profitable as yet. Losses in 2022 were relatively high. I think it was around $2.2 billion in 2022. Secondly, growth has gone backwards in 2023 since the end of the COVID-19 pandemic. This was kind of expected, but still it doesn't make for comfortable reading from an investment point of view. And it is now hoped that the company can grow organically outside of this unnatural situation created by the pandemic. The third area of challenge is regulatory. The biotechnology industry is subject to various regulatory frameworks and oversight, particularly when it involves genetic engineering. Changes in these regulations or compliance issues could impact the company's ability to operate or bring products to the markets. So this is something that an investor should be cognizant of. Another risk is that Ginkgo operates in a competitive market with other biotechnology companies and companies with traditional manufacturing processes. Intense competition could affect their pricing, their market share, and their profitability. And then last but not least, dependence on biological processes and supply chains for raw materials, for instance, could make Ginkgo vulnerable to supply chain disruptions. Things such as disease outbreaks affecting microbial cultures or shortages in critical components for their foundry technology. So this is something else that should be considered before making an investment in this company. So in conclusion, this is a very exciting company. It does something that no one else is doing, and they're doing it at the forefront of technology. In this day and age of a number of buzzwords such as artificial intelligence, robotics, genetic engineering, and so forth, there is certainly the opportunity for a convergence of these technologies to lead to exponential growth of companies such as Ginkgo BioWorks. However, this is a high risk investment. We believe that it is a high risk, high reward opportunity, but the risks are significant. And this is something that needs to be borne in mind. This really is why we hold such a small position of Ginkgo BioWorks in our overall portfolio, but we are excited about the prospects for this company going forward. So that's about it for today. Thank you very much for joining us. And we do hope to see you next time when we will be discussing stock number 9 in our highly focused portfolio. And as promised, we will share who that is. Stock number 9 is MP Materials. MP Materials is, we believe, the largest rare earth miner outside of China. And they have grand ambitions to make inroads into the sector, particularly due to the geopolitical conflicts that are emerging between the West and China. So we will share more about MP Materials with you next time. And until then, keep well and happy investing.